All right, thank you for tuning in to what we're calling Quick Insights. We had some other titles, but they weren't very good. So instead of our regular format where we have a live webinar, I'm just going to give you sort of 5 to 10 minute quick hits on a few different informational pieces in the legal community or in our normal course of guidance that we see a little more frequently. And the hope is that you get a little information, maybe take some time off of what it would take to figure something out. Obviously, as always, this is for informational purposes only and should not be considered a substitute for, nor is it intended to be actual legal advice. So you should always get your own attorney, whether that's someone at Holmquist & Gardner or another firm, to review your particular matter. In this segment, we're going to talk about key issues for seller financing from a seller's perspective, and then we'll finish it with a few points from the borrower's perspective. Seller financing, of course, right now has become more common over the last few years as interest rates crept up on the institutional lending side. We find that some assets are only really marketable for sale if they're going to have seller financing, or they're more appealing from a purchase price perspective. From the seller's perspective, there's some great reasons to go ahead and do that. What that means is that more and more people are finding themselves in the position of evaluating whether or not they want to do seller financing from a seller side. And so we're just going to go through a few quick considerations. Again, varies from deal to deal, so this is just sort of like the quick informational piece. The first thing that's important to reflect on if you're considering this, or if you have a client and you're a broker and you're considering this, or they're considering this, is that effectively seller's going to become the bank. And if seller's going to become the bank, that means typically there is no bank involved. And as we all know in commercial transactions and purchase and sale agreements, the bank can play a pretty critical role in due diligence. In other words, they're the ones that mandate certain things happen in order for closing to occur. With that bank not being present, because now it's the seller, who may be a longtime holder of the property, may have worked with banks in the past, but is not in fact a bank, it's incumbent on that seller to pretend they're a bank with regard to all their due diligence materials. So that means extensive title review, perhaps requiring an extended title policy. That means requiring maybe even a lender's title policy. Actually, you're almost certainly going to have that. You're going to have additional due diligence of the borrower and perhaps guarantors. Then you're going to do things that you may or may not find comfortable, like perhaps performing an environmental phase 1 or even phase 2 on your own property. Sounds kind of silly, but if you're thinking about this as a long-term source of income, or you really want to make sure you're actually going to collect on that loan, maybe good to know what's going on environmentally, if your buyers weren't going to do it anyway. Of course, if the buyers are intending to renovate the property, now, just like a bank, you would want to know what exactly they're planning to do and put provisions in the loan documents that isolate what they can and can't do. Another piece that seems to come up often, or does come up often, is insurance. Now, a bank is going to look very closely at casualty policies, and if there's construction, a builder's all risk policy. But since you're just a seller and you're not a bank, you have to be reminded to do these things. All of this means you probably should have an attorney involved to help out. Brokers can use the CEBA forms for seller financing documents. Those are otherwise known as the LPO forms, or Limited Practice Officer forms. That's a form note, promissory note, and deed of trust. You'd want an attorney to help out because oftentimes, while sometimes those documents will work fine, most of the time they don't align to every aspect of the deal, and you're going to want to make some additions or changes to those, even if they're not super complex. Now, from the buyer perspective, it's great, right? You've got this seller that's going to give you a great loan with terms that make sense, and they're going to do a little bit less nitpicking on what's going on. However, that doesn't give you the hall pass to not do some of the things the bank would do just because seller maybe is a little less sophisticated. So if your seller, for example, never asks you for a certificate of insurance, well, you probably still want to get casualty insurance, as you might imagine. So there are these pieces of the puzzle. Same with title review. Just because seller isn't crazy about going through the title, you're still going to want to do your normal due diligence and essentially pretend you're the bank. Same with environmental. Look, maybe the seller isn't mandating that, or and you don't have a bank standing there who would mandate it, but there's a reason banks mandate environmental review. That's because environmental liability can be super high and quickly outstrip any profits that would ever be made from the transaction, let alone the property value itself. And so you still want to do those things. Finally, I would mention from the borrower's perspective, you're going to want to have a look at estoppel certificates from tenants. Banks would certainly require those. In the CEBA forms, if you're using those on a purchase and sale agreement, those are not mandatory to be provided. So as a buyer, you may want to throw in there that they need to be provided by the end of the feasibility date. Again, these are just a few key issues to think about if you're thinking about getting involved in a seller financing transaction. And of course, please don't rely on this as legal advice. And if you need an attorney, Holmquist & Gardner's there for you. In any event, get one involved to help you out. Thanks.